2022 was a great year for the Sharjah residential sales market, particularly for the off-plan market. The volume of sales transactions increased 15% year on year, and that was primarily driven by developers. We saw the greatest demand being for apartments, particularly within areas such as Mu'ayla commercial and projects like Al Jada, Mamsha and Al Zahia Uptown. In other locations, places such as Al Khan saw strong demand thanks to projects from Eagle Hills in Miriam Island, which again was driven by apartment sales. So 22 was a great year for the rental market from the perspective of demand. We saw occupancy levels across most of the prime communities improve significantly. Now most properties that are within that category have in excess of 90% occupancy levels. As a result of this, we started to see rentals improve towards the tail end of the year, particularly within sort of Q4 2022. Rents increasing anywhere from 5 to 10% on average within that period. Key communities that benefited from this include areas such as Mu'ayla commercial and the sort of Al Khan, Al Mamza area along the coastline and border with Dubai. Didn't really see much change in the office market between 21 and 22. It was very much a subdued market. Demand has sort of remained weak for the past number of years. However, some projects within key developments, particularly those within the CBD and in sort of more integrated communities like in Sahara Centre within their Healthcare City project, saw good demand at premium spaces. However, the majority of demand remains for the sort of Cat B quality space, offering fitted offices, targeting the sort of small to medium size occupiers. Looking ahead, what we see happening within the market is more of a continuation of current rental levels. We have obviously clear segregation within pricing for some of the premium assets towards the more Cat B style offering. We see this continuing at least for the next sort of 18 to 24 months. However, we're starting to see a shift within the market to, as I said, these integrated communities who are able to charge a premium and are seeing greatest demand. So going beyond the sort of short term, we expect those sort of communities and developments to see the greatest sort of price appreciation from a rental perspective. So 2022 was a great year for Sharjah's industrial market. Whilst rents initially in the first half of the year remained flat, occupancy levels saw significant growth. And on average across the Emirates, occupancy levels currently stand at around 85%, which is now starting to have an impact on the rental levels. And we started to see that particularly towards the tail end of 2022, rents increasing anywhere from sort of 5 to 10% within that sort of quarter. 2022 certainly saw the greatest level of demand for industrial warehousing, particularly within some of the key locations within industrial areas 2 through to 18. Those that sort of bordered the E11 in particular saw significant demand, as well as some locations further out within Al Sharjah and Emirates Industrial City that benefited from connectivity through the E611. So last year, the greatest amount of demand we got in inquiries came from small to medium size occupiers, predominantly looking at space anywhere from 2.5 to 5,000 square feet. And these were predominantly trading companies looking at space within industrial areas 2 through to 18. Prices within that sort of bracket varied anywhere from 24 to sort of 28 dirhams a square foot for some of the more prime assets. I think 2023 is going to see a continuation of the improvements and growth that we saw towards the end of last year. I think industrial and residential rents are going to lead the way from a growth perspective. And then within the sales market, we're going to start to see a large number of developer units being handed over, which is going to add to the secondary market, and we're really going to start to see that mature and grow as we move forward.